Thanks for clicking! TD Bank is offering a variable rate mortgage so good that it's trying to keep it secret from the government. This according to the front page of the Financial Post for 3 days over the weekend.
This is not what I wanted at all!
Indeed, and in an obvious attempt to dispel any notions that the media and the banks are working together, the Financial Post article notes that the deal is sizzling. And, as mentioned, the deal is so good that TD is keeping it secret, beyond being on so many front pages of the financial news networks. Yep, that's the state of the Canadian media/real estate industry, calling something secret while it's on all of the front pages.
Don't tell anyone.
So what I want to do today is go over TD's sizzling deal, discuss why it's being kept a secret, and then go over some implications. How attractive variable rate mortgages are will be largely dependent on where the Bank of Canada moves on interest rates, which will be dependent on the inflation data coming out on May 21st. We'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this TD offering. Onto this secret deal being offered by TD, which is making its way around the news networks. First off, what exactly is it? TD is offering a 5-year variable rate mortgage at prime minus 1.16, or 6.19%.
That doesn't make any sense.
No, it doesn't, not at first glance, but as the Financial Post article rightly points out, TD has its own prime rate, which it sets 15 basis points higher than the prime rate of almost every other bank, sitting at 7.35. TD changed its prime rate back in 2016 without a corresponding move by the Bank of Canada, which the Financial Post calls having moxie. As a brief side note, while the Financial Post doesn't offer any reason for TD changing its prime rate, changing that rate so it's different than everyone else's prime rate, only saying that means it has moxie, in effect what it does is make shopping for a variable rate even more cumbersome, as if Bank A is offering you prime minus 1 and Bank B, TD, is offering you prime minus 1.5, the TD offer sounds better than Bank 1, when in effect you're getting the same rate from both lenders.
Pay attention.
Regardless though, the article notes that TD is offering this rate for uninsured mortgages, meaning when the borrower has 20% down, has an amortization over 25 years, and or takes money out of their home, vis-a-vis a refinance or equity takeout.
Something just came across my desk, John.
And yeah, it's definitely a good deal if variable is the route in which you want it to take, 54 basis points less than the next lowest nationally advertised variable rate. But don't get too excited. As the Post notes, there's a good chance that TD is trying to keep this offering under wraps, with a TD insider saying that the bank wants to keep a low profile given potential heat from Ottawa. Is this article for real? The offering from TD is advertised across all these sources of financial media, and TD insiders say they don't want policymakers to find out about it?
But would you think I wasn't going to find out?
Rob McClister mystery shopped 2 TD reps on this rate trying to get this offer. The one said they could get it maybe on exception, and the other one didn't know what it was. So, let's summarize up till now. TD has this sizzling rate at 6.19, but they don't want people to know about it, as they don't want to draw the ire from policymakers who don't want to see anything inflame the housing market or current debt levels. And the rate is so secret, this offering is so secret, that even TD's own reps don't know about it. And as such, it's being advertised across Canada's financial media.
It's very exclusive.
Yeah, this is a very, very strange narrative, with even the Financial Post noting that aside from hoodwinking unsuspecting customers into paying higher than informed buyers, there are very few reasons why a bank would hide a good rate from the public. It's not really hidden now, is it?
Be a shame if it was.
So, based on this narrative, TD is offering this great variable rate at 6.19 right now, but it wants that rate hidden from policymakers because those policymakers will get upset that the bank may be trying to inflame the housing market or run up more and more Canadian debt. Oh, and here's the kicker, it's only good until May 14th.
You present it as an exclusive thing. Look.
That was a clip from a TV miniseries on Bernie Madoff starring Richard Dreyfuss. A good watch if you haven't seen it.
That's how I've been living my whole life.
So, this rate is available only until the 14th, but the real question is, how great is this secret rate? Right now, a decent 3-year fixed uninsured rate from RBC is sitting at 5.65. So if you take the TD rate, if you take that variable rate mortgage sitting at 6.19, you're making the bet that the Bank of Canada is going to be cutting rates by 50 basis points in time to make that rate worth it. So how likely is it that the bank is going to be cutting rates by 50 basis points in time to make that rate worth it? Well, according to the most recent market participant survey conducted by the Bank of Canada, those two cuts should be here by July. Though, admittedly, that survey was conducted prior to it looking more and more like the Federal Reserve will be remaining higher for longer. Further, that same survey that was conducted at this point in time last year said that rates should be 100 basis points less at this point in time this year.
When that happens.
And as for what the bank thinks, Bank of Canada Governor Tiff Macklem recently told the House Finance Committee that he expects rates to fall gradually and will be unlikely to drop down to pre-pandemic levels, back when prime was 3.95 compared to the 7.2 that it's sitting right now. So that's a cut in the prime rate between 3.95 and the 7.2 that we have right now. The 7.2 prime that everyone else uses.
I like your moxie, kid.
So, how likely is it that the bank is going to be able to cut rates by 50 basis points? Really more than that in order to make that initial buy-in worth it, that initial time where those borrowers paid more on their variable rate mortgage than they could have gotten during a fixed? Well, I definitely wouldn't count it out, but no one knows for sure. And, as we've talked about before on this channel so much, the Bank of Canada is going to be constrained by the Federal Reserve and how much it can cut, with Scotiabank's Derek Holt saying if the bank cuts too much, if that spread between the Bank of Canada and the Federal Reserve gets too large, that could crater the currency. So, how far can the spread between the Federal Reserve and the Bank of Canada go? According to Royce Mendez of Desjardins, the bank can only cut 1 or 2 times before the spread becomes uncomfortable. That is, before our currency devalues so much that we start to import inflation. So, is it likely that we'll see 50 basis points in rate cuts over the next 3 years in time to make that variable rate worth it? I think it's possible, but I also don't think this is a game changer. Certainly not one that would require the appearance of secrecy by flooding the media with this offering. If buyers, if homeowners were thinking about going with a variable rate anyway, then this offering may indeed be enough to entice them into that variable. However, if buyers, if homeowners wanted that safety of that fixed rate, which I don't blame them given the news articles that continue to come out almost weekly about the dangers of a variable rate mortgage if the finances aren't in order, then they'll probably still stick with that fixed rate. Further, as mentioned, that deal from TD is at 6.19%, meaning borrowers would have to qualify at 8.19, so it doesn't add any additional buying power, it doesn't add any additional qualifying power, definitely not enough to inflame the market. But I think the real story here is the level of ridiculousness that happened over the weekend, with TD's secret rate being plastered all over the Financial Post for 3 days straight, saying that the rate was being kept secret because policymakers wouldn't like it.
What are you, stupid? Huh?
As mentioned, Rob McClister noted that there are very few other reasons for a bank to want to keep a rate secret, other than keeping it secret from policymakers or hoodwinking unsuspecting consumers. Both of which, either A, the bank lending out money so cheaply that it's going to inflame the housing market or induce Canadians to run up even more debt, or B, hoodwinking consumers, both of which don't look that great. And then this secret rate is all over the media anyway. So, in summary, TD has a sizzling variable rate mortgage that's being plastered all over the media while the bank attempts to keep it secret and its own reps don't even know they have it, as, according to the Financial Post at least, the bank is either worried about policymakers or is trying to hoodwink consumers. The rate is definitely a good rate if you were thinking about going with a variable rate mortgage anyway, only available until the 14th, after which we'll see if there's any more secrets that make their way across all of Canadian financial media.
Oh, there just might be, Chris.
With that said, we will continue to track Canada's real estate market and its mortgage market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.